Welcome back to Income Trading 101. Today is February 20th, 2021. We're going to take a look at the bond governance tokens for BarnBridge today. It's one of the growing decentralized finance or DeFi tokens out there. We're looking at it using sort of the Uniswap USD conversion. So let's just go back. This token hasn't been trading that long. You can see it really went live back in late October of 2020 and came off a bit. I mean, it had a strong pop and then it came off from that a bit and just sort of muddled through, and then it started to rally. So if you look from this low down here of, say, you're looking at, let's move that away. You're looking at a rough closing estimate of $16.83. It actually had a low of 14.79, so just about 14.80, all the way up to a high cresting point of $77.79. So, that's quite a bit of a move, a $63 move this year in a matter of about 5 weeks. So this token's obviously gotten a lot of play. I just want to take a look at it today. It is something that I have a little bit of. Some other friends have a bit of too. So full disclosure, I want this thing to go up through the moon. But let's just take a look today and see if I'm actually crazy or not. So I got a good basis for it, a good price range. So we're gonna just really focus on this part down over here, and the 2021 move. But we're gonna switch up some time frames as well. You guys know how I like to do this. So let's go ahead and start with the moving average, and we'll get a few of those in there. I still haven't really tweaked my setup for crypto specifically. I'm still using a 10-day, which is more relevant to the stock market as a 2-week indicator, simply because the stock markets only trade 5 days a week, and crypto doesn't sleep. Crypto just keeps going. So I should probably at some point sit down and look at another indicator, another time frame for these indicators, because I'm still using my 10 period, 20 period, and 60 period. And there's, of course, no surprise here with this move higher. You have a situation where the green line, the 10-day, is higher than the 20, which is higher than the 60-day. The 60-day barely has enough information to exist, but that's okay. The other thing that's relevant is you can see that the 10-day and the 20-day are actually getting closer together. So I love it when these lines have a lot more room apart, right? When they're further apart, that supports the trend a lot more. When they're sort of in line, that lets me know that price is coming back down to the average, right? With the average of the 20 period. So let's switch up the time frame just to see if that gives us any more indication. My first one I'm going to switch up to is a 4-hour. And look at that. At the 4-hour point, we actually have a bearish signal. We had a cross last night or yesterday actually, and we've got the 60-day above the 20, which is above the 10-day. So this is a bearish moving average right there. We're going to switch it up, take it even lower down to 1 hour. And at the 1 hour, because of this rally that we saw yesterday into this morning, we've got a bit more congestion. So the 10-day is higher than the 20, but both are still below the 60 period. And I also, if you notice, price action is actually climbing above it's crossed both moving averages. So something to be aware of as well. That just means more congestion, less certainty in your position. Let's go ahead and drop it just for the last point we're going to do is the 15-minute. And so at the shorter time frame, that little up move that we've seen the last couple days is high enough to make this appear to be a buy. So it's definitely a short term or short position buy. But in the, I think it was at the 4 hour and at the 4 hour, it looks like a short, and at the 1 day level, it still looks long, but the 10 and the 20 period are approaching each other at this level. So definitely reason to pause a little bit if you're intending to hold this for a long time. If you're going to say day trade it, you might be able to actually squeeze out a little money in there. So let's go ahead now look at the MACD, which is of course a combination of moving averages, and it's meant to put two of them out there. It's meant to give you an indication of momentum. No surprises. Back here you saw a crossover below the oversold, and we've gotten a rally since then. So let's go ahead and tighten that up a little. And I'm actually going to change just so you can just so you get a better sense. I want my MACD line to actually be green, and I want my signal line to be red. Mainly because when the MACD line is above the signal line, it's going to be a buy. And when the MACD line is below the signal line, you're definitely looking at selling it. And let's play with the little time action too. Using TradeStation or any other program that allows for the easy manipulation of time or changing of time settings is huge, because you're just able to see so much more at this level. So, I should probably change the histogram color just so that you can see it a little more clearly. Let's just make this one like cobalt blue. Yeah, it looks good. Okay. I wanted to be able to see my MACD line and my signal line. So right now at the 4 hour level, it looks like we might be getting a crossover below the zero line. So in the oversold category, this could be a very bullish signal. We obviously had a crossover back here on February 15th, where the signal line overtook the MACD line, which would have been a sell indication. And you can see how that played out in the markets themselves. And you can also see that the MACD is a lagging indicator. That's what I say quite a bit, because the actual first red bar was back here on February the 14th, and we didn't get a crossover in the signal until the next day, later, really 24 hours later. So the next day, we finally got a crossover in the MACD and indicator that would have told us to sell. So in that one day, you would have lost, you could have lost about almost $10. Oh, not quite. We'll just say $7, $7 or $6. But either way, it's a lagging indicator. So I always like to pair the MACD with something else. Let's look at this at the 1 hour level. Look at there at the 1 hour level, and that's no surprise. If you remember, at the 1 hour level, the moving averages were looking, they were starting to cross over. The 10 was above the 20, if I remember correctly, and I think the 60 period was still higher than them both, but it looks like that'll probably change in the next few days if we continue this slow rally. But you had a crossover below the zero line, which is an indication of a buy on the MACD at the 1 hour level. So at the 1 hour, this still looks bullish because we haven't fully moved into the overbought category. And I'll take it down to the 15 just for consistency. 15, little trickier to maneuver because it's, it just sort of, it moves around quite a bit. So maybe you don't take it that low. Let's look at a 30. Yeah, 30 actually showed a nice timing for this crossover. If you were to buy based on this crossover and maybe compare it with the regular moving average, that would have been a nice little trade signal to try and bang out another, $3 to $5 over the last few days. So I'm going to take it back to the 1 day, and we are going to see if there's anything that's worth looking at a little bit more. So far, we're sitting at all-time highs, or we're near all-time highs in here. So I'm not certain that the Fibonacci retracement is going to be as relevant, mostly because I wouldn't consider this a full retracement simply because it got back to 100% and then tried to exceed it even. In fact, this is looking more like a double top to me, which is very interesting, right? This candlestick here is just slightly less than this one over on February 5th. So the candlestick on February 5th is slightly less than the one on Valentine's Day, February 14th. And it makes me question whether or not that's a true retracement and then a pop versus just a double top, which the double top would likely be an indicator of this security going lower. So I will flip it out to a shorter time frame just to see if there's anything else for us to really take a look at. Like from the move here, we can take a quick look. Why not? Why not? Doesn't cost us anything but a little time. Let's see. So I'm going to go from this low back in January to this high, and I'm going to just pull it over just to get a better sense of, there we go. Just get a better sense of where we are and how we've been. So this is very interesting, actually. So if you analyze this up move from January 21st up to February the 4th, you know, this pullback here kind of bounced off of the 57.88, $57.88 level, which is the 38% retracement level, 38.2%. So like I said, every now and then these levels end up, Fibonacci is a great way to see support, see and view support. And I really see that as being the only valid one or the only relevant one. But given the recent pullback of BarnBridge, when it had a pullback and it popped higher, I would expect this token to go ahead and jump higher again. Let's take it to a lower time frame. We can leave it at the same sort of retracement level. Just gives us a little closer look at it and what's happening to it. So I'm not sure that the Fibonacci is useful at this point for you guys, but this is all really interesting, and it's all worth noting. Like it's just good to know how to use these so that you can take a look and look at price action every which way you can. So that is it for today's video. Thank you guys so much for watching. Thank you for listening, and definitely come visit us at incometrading101.com. I'm going to be putting out some freebies. We've got a great video on the 3 best tips to placing a good trade. That's going to be coming out here soon. So definitely join our subscription list, our newsletter, just to be made aware of when that comes out. All right. Hope you have a great day. And as usual, happy trading.